Hello and welcome to the Day Tradestor. This is a YouTube channel where I show you my strategy of swing trading my long-term stocks. I show you all of the actions I take. I show you my sells, I show you my buys, I show you the sell orders that I put on, I show you the sell orders that I take off. And in doing that, I explain my decision-making matrix, my processes, my thoughts, my ideas. And I show you the basic rules of my strategy that are part of a daily moving average crossover. So today we're taking a look at the S&P 500. We can see that we are having a down day. It's clearly not as big as the candle from October 10th. But nevertheless, after having roughly 3 days of upward move, we're now back into a downward trend. It is hump day, so I hope that this is the hump that we'll get over for today. And tomorrow, hopefully it'll bring a nice, beautiful green candle. Today I've got about 14 stocks that we're looking to sell that we received either sell alerts on or that I'm going to place a sell order because price has fallen below my purchase prices. And the first stock I'm going to take a look at is SVM. That's Silver Core Metals. I made a little bit of money with day trading this stock over the last 2 months or month and a half. You can see yesterday we actually had price fall below both our fast moving average and our slow moving average. It opened up significantly lower than both averages. We do have a continuation in price. Even though it's a green candle, price is currently lower than the close of yesterday's candle, and that is a confirmed sell signal. Now with Silver Metals Core, or Silver Core Metals, I currently have 3 books, and each book has 37 shares. Now, even though I had yesterday this price gap down and open below both averages, I only treat each cross, whether that's the fast moving average or price crossing below the slow moving average, as a trigger for 1 day. So again, even though we had price fall below both averages, I'm only going to be selling 1 book, and that book's going to be corresponding to the price crossing the fast moving average. So each book has 37 shares. So I'm going to type in here my 37. Price is currently $6.27. And I bought a book at $4.78. So that will be a nice little profit. Whoops, 3,703. That's not what we want. We want 37 shares. All right, go in and try this again at $6.26. So $6.26 for shares that I bought at $4.78. We'll just round that to $1.50 for 37 shares. So that is roughly $55 in profit on the sell of those shares of Silver Core Metals. Next on the list is a gold miner. That is that is Newmont, NEM. They do mine other metals like silver and zinc, but they are primarily a gold miner and processing company. Let's go ahead and zoom in here. Now, just like silver, there was quite a bit of profit taking yesterday and a little bit early on today. That's mainly what this move is. It's mostly people taking profits. There was no geopolitical news that would be negative, that would be such a negative hit to the gold price or the silver price. There were some large dark pool transactions 2 days ago on the evening of the 21st or the 20th rather, and that possibly triggered some algos to start selling the following day, and it drove the market down a little bit and even on into the day. But we have price crossed below our fast moving average and it crossed below our slow moving average, just like with silver, and we gapped down again today, but price is still lower than the close of yesterday's candle. So that is a sell signal for 1 book. Again, 1 book that we're going to be trading. Now I currently have 12 shares, and I'm fully booked with 3 shares per book. So I'll be placing an order for 3 shares, which is 1 book of Newmont at $85.90. And those shares I bought at $55.62. So I'll just call that $30 in profit per share. So there's $90. So sticking with the gold theme, we're going to go to an ETF, GLD. And that is the Spider Gold Shares ETF. You can see another stock. I've been making some money on day trading. Just like silver and the Newmont gold miners, we have price move down below the fast moving average. However, it just stayed lower than the fast moving average. It did not drop below the slow moving average, but we do still have price currently lower than yesterday's close. So this is a signal to sell one book. And with gold, I max out at 8 shares, and that's 2 shares per book. So we're looking to sell 2 shares, hopefully at $375.28. And the shares I sold at $375.28, I purchased at $314.85. We'll just round everything up, and that is $60 of profit per share, so $120 for the sale of that one book of the gold shares ETF. Now I've been holding on to gold for quite a while. I bought gold back here around August 28th, and the reason I'm showing you my videos and the reason I'm showing you a swing trading strategy using the daily chart. The daily chart means that each candle is 1 day's price action. If you look down here at the bottom of the screen, when I hover over a candle, you can see exactly what date it was. That was August 22nd. It's August 21st. Come back over here. This is July 30th. And this is typically what we're looking for when we either buy or sell based on the moving average crossover, whether it's up or down. And I'm trying to show you that you can be profitable by having a safe strategy. So let's say you watch my video, but it's 4 or 5 days after I actually purchased and after the actual crossover. Because it is a swing trading strategy, you still may not be too late. You can always buy in if you choose and then ride the rest of the ride all the way up. So right here, this is almost a 2-month run. And this is what we're looking for when we trade. This is what I hope you're looking for when you buy and sell stocks. Hopefully, Riot will be something similar. Hopefully, we have ridden a nice little run for Riot, which we have. You can see we had a cross back here around August 25th, and it's been, again, almost 2 months. I currently have 64 shares. I'm maxed out at 16 shares per book. Yesterday, we had price drop and close below the fast-moving average, so we received that sell alert this morning. However, we had price open lower, it gapped down, and it gapped down below the slow-moving average, but I only count 1 cross per day. And the reason I do that is when there is a big move like this, we sometimes get a green candle. You know, this could be a fake out, but if it is not a fake out and tomorrow price is lower when I go in to make my video and price is lower than today's candle close, then I will look to sell another book. But for now, I'm looking to sell 16 shares. So 10, 11, 12, 13, 14, 15, 16 shares. And the current price is $18.59. And I bought shares at $16.34. And that did not go. Let's come down to the whole cent. $18.58 is not going. There we go, $18.58. So I'm going around each number down. I purchase and sell to a $2 of profit per share. So I'm looking at $32 on that. I'm currently roughly $295 in realized gains right now. Price is currently lower than the highest purchase price for the last book, so I will place a sell order on that book, which I purchased for $23.17. So come on over here to the watch list, looking for Riot, should be highlighted. There we go, right click, placing a sell order. We're looking to sell 16 shares. And I purchased those at $23.17. So I go to the first digit, which is a 2 or 20s. 10% of 20 is 2 cents. So I add 2 cents to my purchase price of $23.17 and make that $23.19. 23 and 19 cents. Good to cancel extended hours, confirm and send. So there's our sell order for the book that we were unable to sell at a profit and my day trading strategy. All right, going to move to Taiwan Semiconductor, TSM. So far, you can see that we've had a pretty good run with many of these stocks that we looked at today. They've been quite profitable. So I'll zoom in here. You can see we had price, just like all the other stocks, fell below and closed our fast-moving average. In this particular case, we also had price move down below our slow-moving average. It's probably going to close as well. So tomorrow we will receive an alert on this drop and close below the slow-moving average. But for today, I only count one cross. This is a continuation candle of the trend moving down of this price closing below the fast-moving average. For Taiwan Semiconductor, I currently have 6 shares. I am not maxed out. I have 2 shares per book, so I have 3 books. But we are looking to sell 1 book on this cross and this continuation. So we're going to type in 1 and we're going to bump this up to 2, and we're looking to sell at 287.13. And if I do sell at 287.13, that is a share that I bought for $243.41. So that's roughly $44 per share, makes it $88. I've got 2 more that we're going to take a look at that possibly more than likely will be selling, and the remainders will be either placing sell orders or removing sell orders. So this one is XLU. It's an ETF for the utilities sector. So here again, we have a run since September 19th from $84 to $90. So this is a $6 difference roughly. So I will be selling at a profit more than likely. Yesterday, we had price cross and close below our fast-moving average. We do not have a true continuation, however. We had price gap down just a tiny little bit. Or excuse me, it did not gap down. It gapped up just a little tiny bit. And price is moving down. So I'm mistaken. I will be selling 1 book. My mouth moved faster than my brain. Now with XLU, I max out with 16 shares, and that's 4 shares a book. So I currently have 3 books. I have 1 book already sitting in a sell order from where I was unable to sell that at a profit on my day trading strategy. So we're going to bump this up to 4, and we're looking to sell at 90.58. So the shares that I just sold, I bought at 86.44. We're just going to round everything down to 86.90. So that's a $4 profit per share, making that $16 in rough realized gains. The last one I'm going to look at that we probably will be selling some shares is XTL. That also is an ETF, and that's for telecommunications. This run's been a little bit longer. This run's actually been closer to 5 months. So I bought XTL. The least expensive shares I purchased were $112. So this is a nice run. Again, this is why I'm showing you my swing trading strategy. If you are thinking about getting into the markets, I want to help that idea. I want to push that along because getting into the markets will absolutely benefit you in the long run, as long as you're not trying to day trade. That's far more risky, but a safe, what I consider a safe swing trading strategy. And the reason I consider it safe is because I try very hard not to sell any stocks at a loss. And I also call it safe because if you see my video and it could be a day, 2, 3, 4, 5, maybe even a week later. In this case, it could have been many weeks later. You still could have purchased in if you did your research and you're comfortable buying in after missing my video for however many days or weeks that you missed it. You could still possibly have bought in, just like in this situation. XTL ran for 5 months. So let's go ahead and zoom in here. So just like many of the other stocks we looked at, we had price move and close below the fast moving average. And then we had the price move below and currently is below our slow moving average. This is a continuation candle confirming the downward trend of this crossover. So this is a signal to sell 1 book. And the book is for the price moving across the fast moving average. Again, as I stated before, if tomorrow we look and price is lower than the close of this candle, then we will look to sell another book for this triggered cross. I currently have 8 shares. 4 shares are already sitting in sell orders. So we'll come on over here to our active trader, drop this down to 2. And there's a stock being sold for my day trading. And the current price says it's 142.56, so it's dropped significantly down here. So we'll come in here, 142.56. Nope, that is not going. We'll drop that down we'll just sell market. So I sold those at 143.66 and I bought those for 112. We'll just move that up to 113 for easy math. So that's roughly a $30 profit per share, making that $60. So I'm looking right now, I'm looking at $459 in realized gains so far today on the sale of these shares as the market is dropping. So these 4 shares, they are sitting in sell orders because price fell down before I could sell them. However, these 2 shares, I accidentally made a purchase. I should not have purchased any shares on Monday. You know, when there's a lot going on, when I'm either trying to make a video or I'm looking at over 100 charts trying to watch for my day trading strategy, I do make mistakes. This should not have been purchased. I should now only be down to 4 shares. So for this book that I bought yesterday at 150.59, I'm going to place a sell order because it's already higher. Price is already much lower than that. So selling 2 shares. I purchased them at 150.59, so 10% of the 100 is 10 cents, making it 150.69 is my sell price. 150.69, good till cancel extended hours, confirm and send. And I should have looked a little bit more closely. Looks like I already placed a sell order on that, 156, I did. So I'm canceling one of those. Like I said, I make mistakes. I've got a lot going on while I'm making these videos. And I took a closer look at my notes and the shares that I actually just sold. I bought at 141.26. So we're just going to call that $1 per share, and we'll call that $2 profit instead of the $60, which makes me a little bit happier. I thought I was going to have 6 shares sitting in sell orders, but I did not make all of my notes very clearly on my sticky notes. So if price does continue to fall tomorrow and we have to sell another book, that is the book that I purchased at 112 that I will be selling tomorrow. So I'll still be making profits. Much better to sell when the trend has changed direction on us than to have a lot of our stocks sitting in sell orders. I'm going to do one more sell order, and I'm going to do this for VST, which is Vistra, VST. Price has dropped significantly. We're looking at 1, 2, 3. We're looking at 5 days down. It's dropped really rapidly. It's wiped out. We're looking at from September 5th, so about a month and a half of, we'll call it gains up to 215. But basically, we're looking at right now 3 months of, this is what we would consider a sideways move. It's not really going up, it's not going down, and every time it goes up, it just drops right back down, and it keeps hitting somewhat of the same resistance levels around the 218, and we are looking at somewhat of a similar support level at around $180. I currently have 4 shares, and I'm maxed out, and that's 1 share for each book. Currently already have 2 sitting in a sell order. I'm going to place a sell order for the other 2 because when we have a confirmed move of the fast moving average crossing below the slow moving average, I look to either sell everything I can as profit, and if I'm unable to do that, I place everything in sell orders. So this is going to be the last sell order that I place on video, so as not to take up a great deal of your time, because the process that I use for every single sell order is the same no matter the value of the stock. It's always the same. So if you learn my process on this particular stock or even the previous 2 stocks that I showed you placing sell orders on, you'll know it for all remaining stocks that I will be placing today sell orders on. And that list will be made available later in the video of all of the stocks that I put sell orders on. So let's go on over to Vistra. I'm going to right click. We're looking to sell. And I bought all of my Vistra at the same price at $215.50. So we're placing 2 shares at $215.50. So in the 200s places the 2, 10% of 200 is 20. So I'm going to add 20 cents to the $215.50 and make it $215.70. So $215.70. So whatever value is in the first place, well, just messed up there. We went 215.70, doing too many. I need to click out. Let's go ahead and click into here. And now I can explain a little bit more clearly if you're seeing this for the first time. So my process for placing sell orders is whatever digit is in the first place. This happens to be a 2 in the 200s place. So 10% of 200 is 20 cents. If the price was just $15.70, the first digit is a 1. So 10% of 10, and that would be $10, would be 10 cents. If the price is $5,215, first place digit is a 5, so 10% of 5,000 would be $500. So I would add $500 to the $5,215.70, making it $5,715.70. So whatever digit is first and whatever numerical value it is in that place, I just take 10% of that, and then that's what I add to the actual purchase price. It is the same strategy for every single stock, no matter the value of the stock. But for Vistra, my sell price is $215.70 for the 2 shares, good till cancel extended hours, confirm and send. So now I have all the shares that I have for Vistra that I bought at the same time are sitting and ready for them to sell whenever price changes direction. All right, now that I have those few shares, there were 3 shares that I had to put sell orders on. Now I have to take some sell orders off. And the moment that we have a confirmed cross of the fast moving average crossing back above the slow moving average, and we have continuation, I look to remove any sell orders that I have. Well, all except for one book, that is. So for Boston Scientific, I am currently maxed out with my 8 shares, and that's 2 shares per book. I currently have 2 books sitting in sell orders, so I'm going to remove the most expensive, which is at 107.69. All 8 shares were bought at 107.59. Now, if I was currently not maxed out in my books, I would be purchasing books right now to get me back to having 4 full books. So if right now, if I only had 2 shares, I would be purchasing 6 shares. If I only had 4 shares, I would be purchasing 4 shares. Because when we have a cross, in my strategy, when there's a cross of the fast moving average moving above the slow moving average, and we have a continuation confirmed closed candle that the trend possibly is moving upwards for a while, that is when I want to max out all of my purchases that I have allotted for that equity. Now, when you're creating your strategy, you can do whatever you like. I'm just showing you that with this simple strategy, it is profitable, that you too can be profitable. If you're new to the markets and you're afraid that you're not going to be profitable, you can incorporate any aspect of this strategy into your trading, into your investing, and very likely be profitable over the long run. And that's key. I'm not showing you a strategy so you can get rich quick. I'm showing you a strategy that as you start your investing career over the next 20, 30, 40 years, that by the time you go to retire, you will actually be able to retire, because we are hopefully buying low and selling high. Now, if we had purchased back here, we were unable to sell, we would have had a sell order. If we purchased here, we would not have been able to sell at a profit, we would be placing sell orders. But now, and that is why I currently have 8 shares. I had 8 shares that I brought over from my old account into this new account on August 19th. That's why there's no price associated with these shares. They were purchased in the old account. So hopefully we'll have some good move, and I'm not worried about the move in the short term. And the reason is the S&P 500 typically goes up historically over year after year after year after year and over decade. Boston Scientific is a quality company. Most of the stocks that I buy are quality companies, and they sit in the S&P 500. The other stock I need to look at to do the same thing is Twilio, TWLO. Several days ago, we had the fast moving average cross above the slow moving average, but it crossed on this particular candle on the 6th, but the next day I did not have a continuation of the move. However, the following day I did have continuation, but I did not remove all the sell orders that I could. So Twilio, I max out at 8 shares, and that's 2 shares for each book. I currently have 2 books sitting with sell orders, and I'm going to remove the most expensive of the 2. Again, if I wasn't maxed out back here, I would have maxed out and made myself have 4 books for this particular stock. And it's possibly what I did here. For whatever reason, I just forgot to remove a sell order. Now that's all of the actions that I have to take care of for the triggers that or the alerts that I received today for possible sell orders or selling shares. I do have 3 stocks going to earnings this afternoon and 2 stocks tomorrow that I want to take a look at. First one is IBM. So IBM, I currently have 1 share, and that's currently sitting in a sell order. So just in case this has good news and the price moves up on me, I'm going to cancel that sell order. So now I will at least reap the benefits of the gains if indeed there are gains. So now I'm going to take a look at Lam Research, which is LRCX. See, I've been making money day trading on this stock. When the markets are green and we're riding the bull all the way up, this is where I actually make my money on a daily basis. This is through day trading. But I currently have 10 shares. Let's zoom in again. So I currently have 10 shares. And when I max out on Lam Research, I would have 40 shares. I would have 10 shares per book. And the reason that I am so overweight on Lam Research is because it is a quality company. They provide components for the chip manufacturers, for computer chips for NVIDIA, AMD, Intel Corporation. Although they're not really competitors, there's no competitor to ASML. But what Lam Research does is they make equipment that comes in after ASML has built the chip. After their machines have built the computer chip, Lam Research is next. So they're not competitors. I misspoke there. But they both are big in the chip manufacturing process. So that is why, again, I max out at 40. I'm overweight on Lam Research when I do max out. But at any rate, they go into earnings this afternoon, so I do not want that sell order on. If they go up, I want to capitalize on as much of the possible profits that I can have. And the last one going to earnings today is Tesla. I do not have any shares of Tesla in this account. I have multiple accounts, and one of my accounts that I have is just a Tesla account. I have a substantial amount of money in that particular account, and it's strictly only a Tesla account. I do day trade in that, but I don't day trade much. That's mainly just a buy and hold account, waiting for Tesla to go up to $1,000. All in all, I actually have 3 accounts, and each account has a different strategy. The strategy that I'm showing you in this account is a profitable money-making strategy. I am showing a very simple way to trade. So by my showing you a very simple way to trade, I am losing profits in this account. I could be selling sooner. I could be buying sooner. But the goal of this video is to show people who are not in the markets, again, and those who are not profitable, that they don't need to overcomplicate anything. If they were to just buy good quality companies and plan to be investors as opposed to day traders, they can make money in the long run by swing trading their long-term holdings. Another benefit of trading my long-term holdings is, again, they are mainly in large part, all S&P 500 companies, and many companies in the S&P 500 pay dividends. I'm not a dividend investor. I am a quality company investor. But if you are unable to sell, or in my particular case, if I am unable to sell at a profit, I put a sell order on, and at some point, whether it's days, weeks, months, or even years, the price most likely will come back unless that company is kicked out of the S&P 500. And that's a different ball game there. I have a different set of rules for that. But as long as the company remains in the S&P 500, I will hold that stock. Warren Buffett said that his favorite time to hold a stock is forever. And since he's done extremely well with that philosophy, I figure I'm going to adopt that philosophy, and in turn, I'm trying to teach you that philosophy. But don't take my word for it. Do as much research. Look up Warren Buffett, look up other traders, look up Peter Lynch, look up Bill Ackman, look up Michael Burry. Everybody has a different strategy. But since he's considered one of the greatest investors of all time, I'm not going to try to reinvent any type of trading philosophy or reinvent trading itself. I'm going to copy the masters, and this is the easiest way to copy, and this is the easiest way that I can show you. All right, now tomorrow morning, I have two stocks that are going, and both of these are in this account. One is Dow Inc. Now I've got 9 shares with Dow Inc. I am currently, let's see where I am. I currently have 3 books, each book having 3 shares, and this price is significantly higher than the current price, but I'm going to take off 2 of the sell orders. My policy when I'm selling or removing sell orders for stocks that are going to earnings is I'd like to sell half of the shares I have if I'm able to sell at a profit. If I'm not able to sell at a profit, I would like to remove half of my shares. And that works out great. When I have 4 books, I would just get rid of 2 books or place sell orders on 2 books or any combination. But when I only have 3 books, I err on the side that we're going to have gains and I round up. And I take the half of that. So I'm rounding back up to 4, which means I'm canceling 1 sell order. Excuse me, I'm putting on 1 sell order. The plan is to have a sell order on half of my shares or sell half of my shares at a profit. I'm not able to sell at a profit, so I'm going to put a sell order on 1 book, which is 3 shares. Drop this down to 3, and I bought Dow at $39.42. I bought all 9 shares at $39.42. So I take 10% of the 30, which is 3 cents, and I'm going to add 3 cents and make it $39.45. $39.45. Good till cancel extended hours. So now if price for whatever reason spikes all the way up and captures that before it turns back down, then at least I would have sold 1 book. And that is the purpose of that particular strategy that I've incorporated around earnings. I would rather gain half of the possible profits rather than taking all of the negative hit. So the last one I want to take a look at is UNP, which is Union Pacific. Now UNP, I am currently sitting with 2 shares, which means, since that's an even number, I'm able to either sell or put a sell order on half of my books, so that would take me down to 1. I'm currently, however, price is currently lower than my purchase price. Both shares are already sitting in a limit order. We'll remove the expensive one. So we got $252 in this limit order. If price spikes up and then turns back around, at least it'll capture that and we'll have more money in our pool and our trading account. So removing that sell order, that is the last thing that I had to do on the sell side. It's now time for me to take all $2,800 or as much of it as I can and purchase some stocks. Now I did receive some 4 possible buy alerts today. First one is Intuitive Surgical, which is ISRG. Oh boy, what do we do here? Well, you can see they clearly had a cross, then they had a confirmed cross. I didn't buy in. Right now I currently have 0 shares. Then they went from $4.59 all the way up to $5.29. Well, actually, they went all the way up to $5.49, so they went up $90 because of their great earnings. Let's take a look at their earnings. Their earnings was estimated to be $1.58 per share, but their actual was $2.40 per share, which is a big jump. And you can see investors love when estimates are beat, when companies beat the expert analyst estimates. Investors love it, and they pile in. However, we've got a down day today. So when we've had this big of a move, I do not buy. Even though we've got a cross and a confirmed cross of the trend moving up, I will wait to see if this continues to go down over the next several days. And if it does, I will buy in when it starts to turn around. However, if tomorrow we get a green candle, I will probably buy in then if I actually have the money. But we'll leave Intuitive Surgical on the list and take a look at GM. All right, General Motors, they had a great earnings report. You can see they jumped up as well. They had a nice gap up. And they've got another gap up and a green candle today. I currently have 6 shares, and for GM, I max out at 12. So I'm going to buy 6 shares because we have a cross and a confirmed cross, and we have a good earnings report. So I'm looking to buy 6 shares, 5 plus 1. Hopefully get this at 67.23. So $67.23 for those 6 shares of GM. Now on my 2-minute chart, GM is actually going down in price. So I'm going to place a sell order for 10 cents higher. I just purchased that GM at $67.23. So I'm going to place a sell order for one of those books, which is 3 and 67. Whoop, let me turn that off. So $67.23 moves to 10% of 60 is 6 cents. So it becomes $67.28. So that becomes $67.28. Good till cancel extended hours. And now my day trading stock, because price is moving down, is set. All right, so that account is taken care of. Bank of America is the next stock that we received a buy alert on. So you can see we had the fast moving average cross above the slow moving average yesterday. Even though we had a red candle, it still is above. However, this is not a true continuation candle. Price is lower than the open of this candle. We at least want to be higher than the close of a red candle for a true continuation according to my strategy and my rule set. Again, I have these rules so they would be more easily able to understand and comprehend the rules and be able to follow them yourself if you choose to implement these as part of your strategy while you learn how to trade. The only thing good about my videos for experienced traders would be possible alerts on stocks that you may want to consider to purchase and sell, as I purchase and sell out of the stocks depending on the move. But my videos are mainly geared towards new traders and those who are not profitable. So I'm not going to do anything with Bank of America. We'll leave that on the list and take a look at that tomorrow. And then 3M is a stock that we received an alert on today. They must have had some pretty good earnings. Take a look at this. Estimated at $2.10, but their actual was almost $2.20. So almost 10 cents higher. So if we look, 3M has moved within this range of basically $1.61 to $1.48 for 3 months now. Well, let's actually expand this out and take a closer look. Whoop, charts. I don't want to accidentally hit product depth. I want charts and double click in here. Why isn't it expanding? There we go. Finally expanded. So you can see basically from 144 to 160 for 3 months. It's just, again, this is another example of a stock moving sideways. We typically want it going up, or we typically want it going down. So is this an actual breakout? Did 3M just break out of this range? And if so, that is the best time to actually buy a stock. So I'm going to look at this as a breakout. We did have a cross yesterday. We have a confirmed price. Continuation is above the close of yesterday's candle, which is good, even though it's been a red day for most of the stocks. So I currently have 0 shares. And for 3M, I max out at 8 shares. So that's 2 shares per book. So we're going to hit 10, drop down to, I guess I could have just pumped up from 6. So it's 2 either way. So 8 shares at 166. I do have enough money. So that should give me all of the shares I want for 3M. Now my strategy also, the rule I have in place, as long as I've got money in the account, I'm looking to buy stocks that are going up. Any stock that I had a buy alert on today or yesterday or the week before that I haven't purchased, I'll go ahead and take a look at, because I want to be fully invested. I'm not recommending that you be fully invested. This is just how I'm doing it. This is how I choose to implement my strategy. And the reason I like to be fully invested is if you missed the top 10 days of the year that the market is green, again, if you missed the top 10 trading days, you've missed probably 50% of the entire gains for that year. And since I'm acting as a long-term investor, I don't mind if the prices go down on me. I'll hold those stocks. But at least I will be fully invested and capitalize on that statistic. All right, so that's all of the alerts that I received today that I'm able to purchase. So now I'll move on to yesterday's buy alerts that I didn't have enough money for. And the first one I'm going to take a look at is going to be GE. We got a big red candle today, so we can move on to the next stock. We're clearly not going to be purchasing that. That's opposite of the trend that we want. Next is Box. And if you watched my video yesterday, some of these names you will recall. Box, we had a cross back here on October 7th. If you're new to my videos, date is down here at the bottom. And whenever I hover on a candle, if you look at the y-axis, that'll take you to the date. I apparently just did not have enough money until now to actually buy back into Box. We have 1, 2, 3, 4 days of an uptrend. We've got the MACD going up. We got the RSI going up. I have 0 shares of Box right now. I max out at 16, so 16 shares at the current price of $33. I do have enough, so we're going to go to 10, jump this up to 16, and $33.65 for 16 shares of Box. $33.65. Another stock that I did buy some shares yesterday, I just didn't have enough money to buy fully into, and that is Toast. For Toast, I like to have 20 shares, but I was only able to buy up to 3 books. But I do have a little bit more money. I'm going to disregard this candle because when I bought in, that was actually yesterday. So I disregard this candle because I just want to max out on Toast. So I'm looking to buy 5 shares. And I'm going to get 5 shares at $38 each roughly. So that's 5 shares at $38.43. All right, I've got $332 left. So out of my list, it looks like Zscaler, IWM is ETF for Russell 2000. They're not having a good day today. I'm going to take a look at Zscaler. So Zscaler, I would be buying because what we have here, we had price move back above the fast moving average, and we had a continuation candle yesterday. However, I just did not have enough money to buy back into Zscaler. Zscaler now is $308 and it costs I have 332. So it's possible that I might buy Zscaler. I'm going to take a look at some of these others, see what we have. I'm going to take a look at Shopify. We are pretty extended on this run, although the run can keep going for the rest of the year possibly. But I like to buy in and max out as close to the cross as possible. Well, actually, I just looked at my chart and I should actually be maxing out on Box at 20 shares, and that would be 5 shares per book. So I currently have 16. I need to purchase 4 more shares of Box, and I believe I have enough money right now. 4 shares, that'd be 33.66. That'd be 120. So I do have enough for 4 shares. We're going to drop that down and go back to 33.59. So now I am currently maxed out at Box. I need to make that adjustment on my sticky note. So I now no longer have enough money to buy any of the stocks that I had buy alerts on yesterday because I want to be able to buy a full book. If I can't max out, I at least want to be able to buy a full book. So since I can't, I am finished with my sells. I'm finished with my buys. It's now 3:59. I'm going to move over to the 1 day, 1 minute chart. 1 day, 1 minute. And we'll move this up to the 2-minute time frame. That's what I trade on. And I'm going to pull up and pull this over. We're going to take a look at my favorites, which I'm looking up earnings schedule. So LRCX, they report at 4:05. The next is IBM. They report at 10 minutes after 4. And I'm very curious at Tesla. They report at 4:15. So 4:05, 4:10, and 4:15. So let's go ahead and move this back over. And at 4:05, we have LRCX. All right, we have about 30 seconds left. You can see that there's been a little bit of activity with Lam Research, and you can see where Tesla is going down right now, but they don't report until 4:15. So this is just pre-movement, just like this was a little bit of pre-movement, showing you what's going to happen in about another 15 seconds. We should see some volatile movement for Lam Research. Hopefully it's going to be up and not down and go against us. Let's see, we have 5 seconds left, and usually it's pretty instantaneous on the price action. There we go. And initially we're going down. Well, that green candle is looking pretty good. So hopefully Lam Research will keep going up. In 5 more minutes at 4:10, we have IBM. And as I said, 4:15 is Tesla. So we've already gone up $4. We got a $4 move on Lam Research. And I have 10 shares of Lam Research that I bought at a 112. So even if it does go down, I should be able to still sell at a profit unless it drops by $40. Well, 112 to 140, so $18. But it looks like it's trying to figure out where it wants to go. I'm going to look on my earnings whispers. That has not been updated yet. So just wanted to show you some volatility. I will be back in about, I'll start recording again in about 3.5 minutes so we can see how IBM performs. All right, so Lam Research, I'm going to pull the earnings whispers over. You can see Lam Research, they had reporting earnings of $1.26 per share, which is a 4.1% surprise. It's not a huge surprise. Ooh, not a fan of that. So Tesla reported early, apparently. They weren't scheduled until 4:15, but they already have reported at a negative. So hopefully that's not accurate. That will not be fun. But if Tesla has already reported and they're going down, at least Lam Research is going up. So that's at least a good thing. So I will be back in just a moment. All right, we have about 10 seconds left for, well, IBM. Tesla actually did already report early. They beat on the bottom end, they missed on the bottom end and they beat on the top end. And I'll explain that shortly. So it's off 410. So it looks like IBM also may have reported early because there's not any immediate price action going on. Lam's Research is holding pretty firm here above the closing price of 140. So hopefully we'll maintain this $6 gain. IBM, I only had 1 share, so not a big deal here on this particular downturn. So the top end and the bottom end, also known as the top line and bottom line, that refers to the total revenue that they produced and the overall actual net income. Top line being total revenue and the bottom line being net income. So Tesla missed on the bottom line, but they beat on the top line. And now that we have some more movement on Lam Research, they're dropping back down to 142. Hopefully that will not hold through the rest of the afternoon. At any rate, here are the 3 stocks that I had to go to earnings. Tesla's looking pretty even here. Hopefully that won't be a big negative hit, that miss on the bottom line. But for now, we'll go back to my daily, the day trader chart, which is the daily candle. Look at the S&P 500. It looks like we did come up a little bit from when I started the video. Not much, not much of a move, but at least it is up a bit. So it's time to take a look at our chart of the day. Boston Scientific is BSX. So we'll go to our 1 day and 2 minute time frame. And you can see, so they had a good earnings. Let's see, If we can get their earnings report, they had a gain of 5 cents on their earnings per share. So they went from the close of Friday. That's all I get. So anyway, they went up from their close on Friday to the close of today, almost 5%, 4.95%. Not many stocks went up today. If we take a look at Market Watch, we had a good amount in the red go down. We had some, actually, more were in the green than I thought, given how much the S&P 500 was actually down today. But we do have more red than we do have green. Go back to our chart. So it is nice that a couple of my stocks did go up, even though the overall market was trending down. We did have quite a bit of sells. We also had a few sells on our my day trading strategy. So I made a little bit of money from that. But hopefully you are a owner of Boston Scientific. If you are not an owner of Boston Scientific, now might be a good time to buy. If we look at our daily chart, actually, if we go out to 1 year in a day, you can see that there was a range from February 27th that we might be getting back up to with this particular move, especially after such a good earnings. So back in February, we topped out at 107. We reached 109 back in September. So maybe this will be a nice move that sends us back up to all new all-time highs. So if you're not an owner of Boston Scientific, do some research and you may want to be an owner. Again, this is not financial advice and I am not making a recommendation to buy this particular stock. My recommendation is that you do your own research and make your own decisions. But you are more than welcome to take this into account and add that to your bucket of useful information so that you can make the most informed decision that you can in purchasing your stocks. Take a look at all of the actions that I did today. So I sold Silver Core Metals, Newmont, the ETF with gold, Riot, Taiwan Semiconductor, the ETF XLU for utilities, the ETF XTL for telecommunications. So UAL, Joby, V, BSX, and Twilio are down here. They had to do with sell orders and not actually, I didn't make a sell. So I put sell orders on United Airlines, Joby, and Visa. I can delete BSX because we took off a sell order. We took off a sell order for IBM, took off sell orders for Lam Research, took off a sell order for Dow, and we took off a sell order for Union Pacific. And I bought General Motors, 3M, Box, and Toast. So if you own any of these, you may want to consider selling. Again, do your own research and make up your own mind. And if you are thinking about buying any of these, take all the information that you can gather, including the information that I gave you in this video, to make as much of an informed decision as you can in reference to these 4 stocks. So now I'll show you my realized earnings and portfolio performance as of yesterday's close. All right, it shows that my total gains for the day, my realized gains, making 39 trades, is $41.24. However, that is not accurate. I did make $401 roughly in realized gains from the trades I made earlier today. If you're new to my video, Charles Schwab, for their accounting purposes, they take the last in is the first one to go out. My accounting purposes, I take the most expensive stock that's still less expensive than the current price in which I'm selling shares. And any share that I am unable to sell at a profit, I put in sell orders. But I do not have that option with Charles Schwab. I have last in, first out, or first in, last out, or first in, first out. I do not have the ability to pick which stock that I purchased that I actually want to sell, so that would reflect possibly a more accurate realized gains to realized losses. But I don't. But for records, I do accept this as my realized gains for the day, which is $41.24. I opened this account on August 18th, August 19th, and my portfolio is performing at 8.34% compared to the S&P 500 at 5.27%. The old account in which I transferred all of the funds over to this account, I was performing at 16.26 from January 1 to August 18th compared to the S&P 500 on the same time frame, 10.54%. And when we combine the two, my account, I'm performing at 24.6% compared to the S&P 500 at 15.81%, which means I am outperforming the S&P 500 by 8.79%. So hopefully I'm gaining your trust if you've been watching my videos. Hopefully you've seen some improvement in my exposition while I'm explaining my process. If you are making it to the end of my videos, or you're watching my videos daily or every other day or however frequently, if you are watching my videos to gain some information or to help improve your skill sets as a trader and especially as an investor, then I thank you very much. And could you please take the time and click that like, share, and subscribe button to help me help other people. And with that, thank you very much, and I hope you have an awesome rest of your evening.